everyone, and welcome to another edition of Gartley Advisory, giving you an update on COVID and rental properties. We've had a lot of questions of late about what to do with their rental property, especially if you're not getting much rent in or reduced rent because the tenant is unable to pay. So I thought we'd run through a few questions and that I've come across and give you some solutions, especially as 30th of June is now fast approaching. And the tax office have indicated that they're going to certainly look at rental properties again this year. So stay tuned as I just bring the PowerPoint presentation up and share my screen with you, and off we go. Hope everyone's having a great evening. There's been a lot happening. We did a JobKeeper update earlier this week, and that's all now finished. People are slowly getting their JobKeeper money. Businesses are slowly getting back to normal, not all. But of course, there's impacts across the whole economy. It's not just businesses, it's landlords, it's tenants, it's people in general. So tonight, let's go and have a look at some of these questions that are being asked by some of our clients. So, COVID-19, your questions asked as a residential landlord. Okay. First of all, the disclaimer that we'd like to present to you is a general nature. Obviously, seek your own professional advice. While we make every effort to verify the accuracy of what we're providing, we do suggest that you seek advice before acting. Tonight we're taking extracts from our June newsletter. Our June newsletter will come out in the next couple of days, so jump on board. There's lots of great information in the newsletter, and specifically we've answered some of your questions about COVID-19 and rental properties. If you're not on our newsletter database, contact the office via email or phone us up 9597 9966 and we'll put you on our database. First couple of questions. If I reduce my tenant's rent, do I need to reduce my expenses in the same proportion? Obviously no. Claim the expenses as usual, providing it's a non-related party transaction. And by that I mean, obviously, if you're renting the house back to yourself, or you wouldn't be doing that, you'd just be living in it, or if you decided that you bunkled down in your holiday house, you can't claim those expenses in the same way that you did previously. If I were to receive a back payment of rent owing, when do I declare it? You declare rent in the period that you receive it, not when you accrue it. So we're getting towards the end of June. You probably won't get a back rent this year, but you will next year. The tax office will expect that that back rent will be not backdated, but included in the 2021 return. So if the tenants are not paying the full rent due to COVID-19 arrangements, can I still claim 100% of the expenses for the rental property? Yes, any expenses normally incurred can still be claimed, but just keep good records. We'll talk about records a little bit later, but the tax office will expect that if they're not paying full rent, or if they've left and you can't rent out the property, that you still got the property available for rental. Bank deferral of repayments, can I still claim my nominal interest? Yes, you can claim any interest charged by the bank. Interest remains a tax deductible expense regardless if you need to defer the payments. So in most cases, the interest will keep accumulating. The banks aren't giving us free money, unfortunately. It just means that the payments are deferred. So you can claim that interest against your rental property and rental income. The question we've been asked a lot lately is, can I claim the $150,000 asset write-off available for small business? Unfortunately, this write-off is not available for property investors, only for small business. Having said that, that leads into the question that if you do run a small business and you want to claim the 150, you've only really got to the end of this month. There has been no indication that they're going to defer it at this stage. There's been quite a few clients that have actually have a lot of what I call summer rentals. and that's where they go down to their holiday house in Rye during the winter, or they might have it available for rent, but it doesn't really get rented a lot. And they've decided to move in. So the tax office is very aware that this is the case. And of course, they're going to be taking a keen interest. So where you bunker down as a safe haven in your holiday house, the ATO will expect that you're keeping evidence of the fact that you're using it only for yourself and not for tenants, and they'd expect things to be apportioned. They're a bit clever these days, so they look at water and electricity usage to see how they can evaluate whether to claim the deductions for private use versus for the tenant. If you're using the property yourself rather than tenanting, or being available for rent, you must increase the private expense proportion of the expenses accordingly. So we'll go through with you when you do your tax return, but it's just something to note. Some landlords will reduce their advertising for the property to save costs, and to claim a deduction, you must show that the property is available still for rent. If you're not advertising or using a real estate agent, you'll need to show other forms of evidence to support your claims. So that could be, you might still be having it on Facebook, available for rent or stays or whatever. You need to show the evidence that you've still got it available. 3 steps when it comes to your rental property and tax. Don't forget to include all your income that you receive. So it's including insurance rebates, all money, cash money from holiday rentals, stuff like that. Claim the right expenses, including proportioning the private usage. We do see some clients that don't actually want to do that or haven't done it. The tax officers are really going to start coming down harder on the private usage proportion. And keep all your records to prove your claims. So if you've had a lawnmower guy come along and mow the lawn, and you're paying $20, make sure you get a receipt, because without that, you can't claim the right deductions. Good records means less ATO problems. So the records to keep, obviously the contract of purchase and sale of a property, the proof of income, so rental statements. If you don't using a real estate agent, then obviously records of tenants and how long they've been renting it for, and proportioning if you're only renting out part of the home. So look, B&B, so you might only be renting out the room, so we need to proportion the expenses. The private usage and the calculation and evidence. So if you're saying that you've got the internet connected down there and you're claiming 100% of it and you're never actually on the property, then that's okay. But if you're actually going down there, then we've got to proportion that particular expense. And the evidence and the steps taken to show that the property is available for use. That's a big one. The tax office are now starting to focus on that. It's no good saying that, oh, we've only got $5,000 of rent because we couldn't find a tenant. They want to actually see that you've actually made an effort to do that. The alternative is you don't claim it as a rental property, and you don't obviously have any money to declare. It's when you have money to declare and you're using it as a rental property that we really need to make sure that we portion these expenses. Capital gains is payable regardless if it's your holiday home or rental property, and obviously that opens a whole lot of other questions, but not COVID-19 questions. Doing COVID repairs on holiday house, is it an improvement or repair? So a lot of clients at the moment I'm hearing are actually going down and fixing up their holiday houses while it's a quiet period in the middle of winter and COVID, meaning that you can't go around. So I've just sort of run through a couple of these sort of examples to just clarify, because we're getting lots of questions around repair versus replacement versus capital. So replacing something worn out or broken as a result of renting the property, likely to be a repair. Preventing something from deterioration on your property is maintenance. So that's again a nice little tax deduction. Repairs is something that was known prior to renting. So an initial repair. So you go out and buy a property and you knew that the floor joists were going to need replacing. That's likely to be capital. Now, you can't actually claim it, but what it does do is adds to the cost base of the property. So when you sell it, it reduces your capital gain. The problem we've got is some of the older properties where people haven't kept receipts, and that is a bit of an issue. So what we're telling clients is keep a box of your receipts, scan them in, keep a nice spreadsheet. It makes it so much easier when you come to work out the capital gain. Installing a new appliance, so a new hot water service, a new oven, depreciation. So we'll depreciate that at depreciation rates over a number of periods. Below the item of $300, we could probably write off. So if you put a fan in the kitchen, exhaust fan under 300, we'd write that off. Fixing an entire structure, capital works. So capital works again, subject to a special works allowance of 2.5%, but generally it's added to the cost base. Is capital works maintenance or a repair? As long as the costs relate to the ongoing maintenance, the property is rented or available for rent, you can claim the cost of repairs and maintenance in the same year you carry them out. But claims for renovations or improvements, which we've just described as capital works, are claimed over time or not at all. Confusion in this area is common. So as we said, here are those couple of points to remember when it comes to claiming those deductions. So we obviously work through every client each year to make sure that they're claiming them correctly. And so far, touch wood, we've had very few claims back from the tax office for audits. I threw this one in because we have a number of clients that have residential properties in their self-managed super funds. I'm a licensed advisor through Merit Wealth, and we do need to make sure that we properly document these. It's not just a matter of allowing the tenant to have a reduction. We need to make sure the super fund has documented that in case the ATO asks why there's a fall in the investment. If you're acting as a landlord with a property, you need to provide the tenant a rent reduction. You'll need to ensure you've got proper documentation maintained. Contact us. We have a few minutes that we would help you put in place to document this. Throw in the state government relief in Victoria to encourage landlords to do the right thing by their tenants. The government will provide $420 million in land tax relief. If a landlord provides tenants impacted by the virus with rent relief, they'll be eligible for a 25% discount on their land tax, while any remaining tax can be deferred until 2021. So it's a nice little help for those particular landlords that have those type of tenants. Evictions will be banned for residential tenancies for 6 months, except in circumstances. I'm not sure what their circumstances would be, but I'm sure there's a list somewhere. Evictions will be banned also for 6 months for non-payment of rent for commercial tenancies involving small and medium businesses. Rental increases will also be banned for commercial and residential properties for the same period. So they're the basic issues around that. There's obviously a few more, but I thought I'd keep this brief tonight. I just sort of give you a bit of, Sue, a bit of a plug here. The latest real estate podcast, go and have a look at that. Real Estate Right in Melbourne, it's obviously on podcasts. She's got some great guest speakers on her podcast over the last couple of weeks, and worth a listen. That's about all I'm going to give you tonight. It's give you a bit of an indication of what you've got to do for your rental property. Please reach out if you need us. We continue to support our clients through uncertain times and beyond. Clients are doing it hard, as most people. It's not that easy yet. There's a bit of a lull. I'm sure we're going to go through another difficult time. Contact us if we can help you. Tax time, COVID time, tax planning, capital gains, whether your rental property is actually set up correctly, whether you're claiming the right amount of interest or the finance. Our numbers there, 597 9966, or our website, gartleyadvisory.com.au. Have a great evening, everyone. Long weekend coming up, so take it easy. For our small business clients, we'll be back on board in a week or two, and enjoy our Melbourne winter. Take care, everyone.